So, if you just glanced at the market close on Friday, you'd probably think, pretty quiet day. But wow, that could not be further from the truth. Underneath that calm surface, a much more turbulent story was unfolding. Okay, let's dive into this week of some seriously mixed signals on Wall Street. Which brings us to the big question, right? Was this a good week for stocks or a bad one? And honestly, the answer is, well, it's complicated. It really depended on where you were looking, because it was like the market was telling two totally different stories all at once. And this right here shows you exactly what I'm talking about. On the one hand, you've got the S&P 500 and the Dow Jones, both ending Friday up a little bit. Looks fine. But then you see the NASDAQ, that tiny little 0.2% dip on Friday. That is hiding the real story. For the whole week, the NASDAQ got hammered, down a painful 3%. That's the conflict we need to unpack. All right, but before we get into all the doom and gloom, let's start with the good stuff. Because believe it or not, there were some genuine bright spots out there. Companies that totally bucked the trend and gave the bulls something to cheer about. And here's the thing you gotta remember. Even when the whole market is nervous, good old-fashioned strong performance still matters. I mean, while all these big picture fears were swirling around, you had some individual companies just crushing it with their earnings reports, and their stocks took off like a rocket. And I'm talking about some great examples here. You've got the payment firm Affirm, the travel giant Expedia, and even Monster Beverage. They all came out with super strong results, which, made their investors pretty happy and gave the rest of us a much-needed dose of good news. The positive story wasn't just limited to a few stocks either. You know how it is. When things get uncertain, investors often run for those so-called safe havens. We saw that happen with both gold and oil futures ticking up. But the real surprise? That came from the world of crypto. Yeah, check that number out. That's the price of a single Bitcoin. It had recently dipped below that big psychological 100K mark, so seeing it stage a strong 2.8% rebound, well, that tells you that the appetite for risk hadn't completely vanished from the markets. Okay, so that was the good news. But all of those bright spots were happening against a pretty dark backdrop of some pretty serious economic anxiety. So now, let's flip the script and look at the warning signs that had investors on edge all week long. There were really three big things weighing on everyone's minds. First, a survey showed consumer sentiment just plunged. We're talking near record lows. That is a huge red flag. Second, you had an ongoing government shutdown creating all this political uncertainty. Now, they did pass a resolution late in the week, which helped, but the damage was kind of done. That anxiety was already out there. So we've got this weird mix, right? Good news from individual companies and some bad news from the broader economy. But the real story of the week, the one that truly dragged the market down, was what happened in the tech sector. And this is where we see the real damage. That tiny little 0.2% drop on Friday completely hides what happened over the entire week. A 3% weekly decline is a huge sell-off for the tech-heavy NASDAQ, and it signals that investors were aggressively selling their tech holdings. And just to put that number into context for you, this was the NASDAQ's worst weekly performance since April. So we're talking about a 7-month low. This wasn't just a small dip. It was a significant and pretty worrying sign of weakness. And the weakness was widespread, hitting some of the biggest names out there. Tesla dropped 3.7%, even after what should have been good news about its CEO's pay package. You had giants like Alphabet and all those crucial chip stocks like AMD, ARM, and Marvel, all under significant pressure. And make no mistake, this was not an isolated American issue. These jitters were global, and they were centered around worries that AI stocks had become overvalued. You saw the ripple effects hit huge companies like SoftBank in Japan and Samsung in South Korea. In fact, Japan's own Nikkei 225 index also had its worst week since April. So let's pull all these different threads together. We've got strong earnings from a few companies, deep economic anxiety, and a major tech sell-off. What is the big picture takeaway from this really chaotic week? Here's the bottom line. While it was great to see companies like Expedia and Affirm do well, those few bright spots just weren't enough to fight back against falling consumer confidence and that serious correction in the tech sector. In the end, the bad news simply outweighed the good. And that leaves us with the big question heading into the next week of trading. Was this just a temporary, maybe even healthy pullback for a tech sector that got a little overheated, or are we seeing the beginning of a more significant, longer-lasting trend away from the stocks that have led the market for so long? The answer to that is probably going to define the market for the rest of the year.